All right, you're welcome, Felix. Please, I want you to take your pen and paper and start writing and document this training because I want to teach you trading as an asset. I want to teach you trading as an asset. Now, what's the trading asset? Trading asset is equal to mindset plus skill set plus tool set. Okay? So pay rapt attention. So the first thing you must learn to understand, I have courses. I have courses that teach you proper understanding of this, but I'm going to show you through this. So mindset, skill set, tool set, it's what made up trading asset. So now today, I'm going to show you how to prove, because we have the three. Skill set is understanding the market itself in a naked dimension, right? That's the skill set. So mindset is ability to stand and make decision, working on yourself as your psychology, as self-management, self-control. That's the first mindset. Ability to stand and make decision and stand by it. Okay, working on yourself to be the professional you're supposed to be and not gambler. Okay, you are first of all a risk manager before becoming a trader. So the mindset is you have a mindset, I'm here for a long term and I want to win. And I need to understand that trading is about repeated and repeated and repeated action. So beyond just trading or hit it once. Okay, so the mindset must be clear. So mindset so is about so mindset is also call it from self-development or call it self-awareness. Self-awareness and control. Self-awareness, management, and control. So at this point, you ought to know how to be in charge of yourself and how to control your emotion, all right? And then how to kill your fear. That's the mindset. Skill set. So skill set is understanding the market's structure, basically. All right? Understanding the market structure or seeing market in a natural, in a naked way. Tool set. So tool set has to do with supporting let's call it AI and other related leverage. Okay, so now, so good thing we have the three. So I'm going to take you through. This is Bitcoin, and I want to take you through this. Please pay attention. Take your note very seriously. So I'm going to put it through. Very, very important, okay? So I'm going to put it through, and you must pay rapt attention. So if you want to screenshot this, you can screenshot it, okay? So in this, so I'm going to take you through understanding the naked chart. Understanding the naked chart. Right? Understanding the naked chart. That's what we're going to do today. And don't play, guys. Very, very important. Don't play. I'm going to document this thing and it's going to help a lot of people. Okay, so you can, if you want to pick it, you can save it, right? So understanding the naked chart. I hope we all understand understanding the naked chart is what I want to do today. Understanding the naked chart. Right? So let's quickly go. Follow me, right? Understanding the naked chart. Okay? Or perhaps understanding the naked chart and how to leverage on PBX scanner. Market scanners. All right, so that should be very, very important for me and you. So since trading is an asset, but what does the asset contain? What does the asset contain? So very important. To buy FOREX. Okay, so what does the, okay, so we've just talked about that. So I'm going to, let's go quickly. So pay attention, take your notes, your jotter, and let's ride the market now. Okay, so I'm deleting it up this. It's very, very important. You need to pay attention because this is going to be very hilarious. Okay, so let's go quickly. This is not a sermon. There's no need for sermon. All right, so let's go. Naked chart. So let's read the market. So you have to see the mind of the market. What is the market doing? See the mind of the market, first of all. So we need to see the mind of the market, first of all. So you don't just trade anyhow. There are other things you need to follow me to learn, but I'm not going to talk about those ones here because it's not enough to know the chart. There are things you need to know fundamentally to be able to maximize the chart. So let's look at it. As a day trader, what am I supposed to do? A day trader, I know if you want to read all the market properly, everything, but as a day trader, your journey starts from the day. Forget about any other thing people tell you. Now, as a day trader, first of all, you want to see what we call daily bias. I'm not going to go detail about that. The daily bias is very important for you. So that means you're going to open your candle properly. Yesterday, what happened? Day before yesterday, what happened? So, but ordinarily, as a day trader, you are supposed to analyze market before the market open. So it's called pre-market analysis, if that's your job. And if you are not a day, it's not your job, you just come in. Don't fail to go back to the daily and see what really happened. Because for somebody who is trading as a day trader, so what was going to happen is it to be that, yeah, so this will have mean that somebody who is, let's take it this way. Okay, so network is messing up. Okay, so let's just go back. So normally this is what you're supposed to do. Remember, we say trading is an asset, so you have the mindset. So you have to train your mind, personal development. You need more of that. Come to my private mentorship, and I will teach you about the mindset of a trader, a mindset of a professional trader. So now, the first thing I want to look at is the daily bias. So this candle closes above this previous day, and this is a swing point. Many do not understand. So this is a reversal. So the market's going to go bullish. So I should be looking for buy for today. Do you get that? Yes, I should be looking for a buy for today. So that simplify my job. So, but there are other routine I need to do to actually buy for today. But I'm bullish for today. So that means for today, I should be looking for a trade to buy in the market. All right. So that means I should be buying the market on Bitcoin today. So somebody say, as simple as that? No more than that, guys. I should be buying Bitcoin today. So, but the question now is that where can I now buy from? That is where you are now going to showcase your skill. So now, but we now need to not fail to understand one thing. The market in overall is bearish. Some of you use trend line. I don't remember to use trend line. So, but is it bad? No. So this is an imaginary line. So, because an imaginary line, you see, this is Bitcoin, an imaginary line formed what we call support and resistance. But I'm not going to those details. So what am I supposed to do as a day trader? So you see, it's a channel. So you can just, if I work with this a channel, this is a high, this is a low, this is a high, this is a low. So that means I'm looking at this market, probably, let's look at it here. This never got there. If it's not going to get there, that would be too bad. So that means you're looking at $75,000 for Bitcoin, maybe within this week. Now, I'm not doing prediction for you. I'm only telling you what's happening. So, but I'm not telling you to do all of this channel. But if you can do that, it's fine. So let's take off all of this. So I just show you a bigger picture. So what am I supposed to do? There is what we call break of structure. So in that, you have checked the daily bias, the market is bullish, even though for today, the market is bullish, even though we're in a downtrend. So this is a downtrend. Why is it a downtrend? Okay, it's a downtrend because let's look at the recent break of structure. This was a recent break of structure as the market was coming down. Please learn to look at the bigger picture. So somebody is following me, right? Good. So this is this low that created. If you are not getting it right, let me squeeze to an extent and show you. Here high, here low, higher high. This is market structure shift. This is a high. This is a break of structure. This is another break. Then this is a new break. So that means if that's a new break, where is the origin that produces this break coming down? This is the origin. So that means I need to mark that point as a high, or what you call swing high on a daily time frame. So I've spotted my swing high. Then where did the market travel to from here on a daily time frame? The market traveled to this bottom here. Oh, that's great. So that means on daily time frame, this place, these two places here and here is my dealing range overall, not today. For today, market is bullish. All this journey I'm doing may not too necessary, but they are important because if you trade regularly, all right? So because I shouldn't come here, but I'm opening your mind to see. Remember, understanding the what? Understanding the naked chart and leverage on PBS market scanner, all right? So now, this is a high, this is a low. So what we call this is called a swing high and a swing low. So if that's the case, what next am I supposed to do? First of all, I've seen the structure, right? So market is bearish overall. But am I going to trade on this structure now? No. So that's where you do what we call top-down analysis. Here you have seen the daily, the market is bullish for the day. So, but this is the point. The market now is bearish. So I need to really understand some joints. So this is the structure. So daily bias, then structural bias, all right? The structural and trend bias. So the market is bearish, but today is going to go bullish. Oh, wow. That's contradiction. No. Daily bias is different from the structure. Daily bias is different from the structure. So quickly, let's take this now. So since this is the swing high, swing low, the next thing I need to do on a daily time, on a higher time frame, is to look where is the market going to come to. So I'm looking for where to buy or where to sell. So on a bigger picture, you are going to take your Fibonacci retracement and mark from the high to the low. So once you mark from the high to the low, so if you want to sell, the continuation of your selling will be until the market come to premium. Now, if it comes to premium, that is 50% is the equilibrium. So it can reject at the equilibrium. Number two, it can reject at what we call golden zone. That is between 50 to 61. Or it can reject at OTE. You want to understand all of this concept, come to our ecosystem. Then that is a more powerful one. Now, so since this is your area of focus, so that's what you are trying to discover. Once you understand the daily bias, the next you need to understand is what is the directional movement of the market, which is the structure. The market is bearish overall. Now, I've been able to delineate this. The next you want to do is to look at point of interest inside an area of focus. So then we have these are significant area. First, we have an area here. So I'm going to mark it like this. What is this area called? It's an imbalance. Then we have another imbalance up here. So this imbalance seems to be more powerful here, this one up here. I will tell you more if you want to learn. How do I validate the best imbalance, which is the fair value gap? So imbalance can be liquidity void, all right, or a fair value gap. So all of these are internal, all right, because market move from liquidity to liquidity. So all of these are internal liquidity. And this is inefficiency. The market didn't create a balance, so it didn't want to go to balance it before the market continued to move. So these two guys are very important for you, fair value gap, fair value gap. The other thing you want to pay attention to in your PDRAs, that is premium and discount area, are called the fair value gap and the order block. So you can see trading is mechanical, and so you don't need to start rushing yourself unnecessarily. You must learn how to take your step one step at a time. So you don't jump at the market unnecessarily. I see a lot of people, they just jump to the market. Oh, market's about to go. Now, stop being emotional. You must learn how to control your emotion and kill fears. Now, lack of understanding bring about fears, and not improper arrangement or preparation bring about emotion. So you have to kill those things. Now, having done this, you can see that trading is mechanical. I've done this now. Oh, when the market return to this area, we probably want to look for sell. And if you get there, what should it do for me to sell? So these are another question you will need to ask yourself. Now, so but looking at this, no problem. We have seen this, so we penned it there. Now, I need to step down into the internal structure of this market. And what is the internal structure of this market? This market came down here and created a low and smartly move up here to create a high. So it means there is a high here. So I call some things pivot point. So you begin to mark some pivot point. So that is to say, here is a high. Come down here. So this is a high. So I'm now getting an internal structure. Are you following? Can you see that? Now, this is a high. Then this high came down here and created a low. All right. So if this has created a low, so a high a low, a low, a high, another low. So that means we're having internal structure. Then this market that created a high here, a low, that means it went up to create a high. This is daily time frame. Have you seen that? So this is a high because this high gave birth to this low, and this low gave birth to this high internally. Now, this high gave birth to this low, and because this is a swing point. Okay. Now, if that's the case, then lovely. So this high, this low, travel all the way up here, and I took out this. So we call this MSS or change of character. Oh, wow, amazing. So if that's the case, so you want this market to return back to fill up certain area of importance. And that is to say, you're still going to use your Fibonacci retracement. Please take this training very simple, very serious. And because what I'm teaching now is what people charge heavy amount of money for. Now, so I've marked these so that if I'm looking for a buy, because why? The market came and created a low and took out this high, meaning that the market has shifted. Now I want to go up. So, but will I just jump in at that point? The answer is no. I'm looking for the market to pull back into a particular area, and that's what I call area of focus. So the market need to return back to an area of focus for me to look for a buy. Now, in this area of focus, there is inside of it, not all the area you'll be spotting, but there's a place that is very specific to me to pick. It's called point of interest. So I listen to people want to talk about point of interest. Now, a point of interest is inside area of focus. So you can have series point of interest inside an area of focus. Are we following now? So here, the market come down to this point. So we couldn't find a major point that you should look at. The only point I could look at, because I couldn't find a fair value gap, all of them were filled up. And then if it's the other block, this was mitigated immediately. All right. This was mitigated immediately. The market moved, right? So the market moved, created this, and the market returned back to mitigate it. So what am I going to find? The simple thing I'm going to find in this area of focus is a demand zone. All right? It's a what? It's a demand zone I'm going to find. And where's the demand zone? So I'm going to take the wick of this candle wick down here is the demand zone, or you can call it support, whatever. All right? Can you see that? So this is the area, this is the point of interest. All right. So this is the point of interest. So I'm waiting for the market. And now, why this point of interest is very significant? Now, it created a liquidity here, but it is when you go to lower time frame, you're going to find it. So I'm waiting for this market to return back in. Nevertheless, that doesn't mean I'm not going to trade back to it. Because if I see that the market is returning, I'm trading back to it. And when it comes there, I'm going to take a trade. Very lovely, right? Good. Makes sense. So now let's quickly go. This is my point of interest. When the market traveled to it on a lower time frame. Now, so when the market came here on this and closed for this day, I'm going to go to a lower time frame the following day because it has hit my area of focus and hit my point of interest specifically. Good and fine. Then the market traveled all the way up. And so that's how you trade and you make more money. Okay, so I don't know where probably you may enter from here, but look at it. That's about 13%. About how many days? 1, 2, 3, 4, 5, 6, 7, 8, 9, right? 1, 2, 3, 4, 5, 6, 7, 8. So if it's future trading, if it's sport and all of that, you're in profit. Now, what really happened? The market again broke this high. Oh, that means our journey continues. When you have a new break of structure towards the direction you are facing, it's a potential continuation. Okay, so if that is the case, now where is the origin that produces this high that broke this? So that means this is a break of structure, right? This is a breakout structure. So please pay attention. Breakout structure. So where is the origin that manufactured this? This is it. So I'm going to take my measurement tool and take from the swing low to the swing high. So I swing low to the swing high. So now where's my area of focus? My area of focus is from the equilibrium to the OTE. Okay, so remember you have these guys waiting for you so that when the market get there and reject, you know why it's rejecting. Do you get that? Good. Now, so let's see, this is the area of focus. Now the market is traveling back to it. What are other things you can find inside your area of focus to be point of interest? So point of interest is inside the area of focus. So first of all, you'll find a fair value gap. But remember that this entirely was not mitigated. So that means this gentleman here, the whole thing here, is an order block. All right, so you don't just mark order block irrationally. So this is an order block. And in this order block, there is a little fair value gap. So let's take off this. Now, this head of this candle to this is a fair value gap. You see tiny fair value gap there. Now, but this market traveled to extreme. And what's the extreme? The market traveled inside and took out the fair value gap and hit into the order block. Ordinarily, professionally, for people who are trading professionally, when they find this trade, their stop loss is going to be below the order block. Please take note and understand this. Now, so if that's the case, now we know we're still analyzing daily time frame. Here you come. The market came here. Look at this, right? This was, all right, this was. So here is a swing point. That's a turning point. Now, if you're my student, you know why it's a turning point. The power of three, accumulation, manipulation, and distribution. We know where to enter the distribution candle. All right. If you want to learn how to enter to the distribution candle, you can inbox me and then you can come for one-on-one mentorship. Right? Then, or you can buy some of our books that were produced that give you precision entry into the market. Here you come. The market has created this. Now, this was closed this. That means this day was going to go bearish and it went bearish. Now, you expect this market for the day to go bearish, but it pulled back. It's not a problem. If you understand what you are doing, you know that this is not going to stay because you have an area that the market need to travel to back here. Right? So then we have this day continue the market, then this one continue the market. Therefore, congratulations, because this never come to this. It created some level of liquidity. And now, so this is the point. The market traveled inside. Now, the following day, you know you are buying. So that was yesterday. Now, this is why it's good to do proper analysis. So yesterday was Monday. On Sunday was this. So that means yesterday was bullish for Bitcoin. Very simple. And then today supposed to be bullish for Bitcoin. Now, so now let's look at it very critically. So if that's the case, this is Bitcoin. Now, so you look at it. Accumulation, manipulation, and distribution. And we close above this. We couldn't close above this, nevertheless. We're only a week above it, no problem. But we close above this. Makes sense. And then we didn't go below this because this has actually swapped liquidity or break structure and return back. And then we have this. Now, lovely enough, let's go. There's something you must pay attention to. If this market is not careful, it's going to create some problem for us. And that's what I'm saying here. Now, look at it. We have a little problem here. So this is a fair value gap. So the market has tapped into the fair value gap yesterday and then returned down. A sweep of liquidity or draw. Then we have tapped into the fair value gap. So that's where it's a little bit complicated. But the market closed bullish above this, then we're supposed to be going up. But so you can see the complication here, and that's a little challenge we could have here. But nevertheless, let's watch. So irrespective of what you take as an entry, you want to put your stop loss. Very, very important. So if that's the case, you see now, this is how we do practical, proper market analysis. And so Now you have done the daily setup. Then you go to 4 hours, top-down analysis. Now you go to 4 hours, you're going to see more adjustment and how the market actually read to some areas. All right. So we have this an internal structure, a high, a low, a high, now a low, and then we have a high. Yes, we broke. We have a low, then we have a high. All right. So now this is what happened. So this is a low. So the market come and break this low and shifted the market. Then we have this, right? And then return back here to the, just to mitigate this other block. Then we have a move down. This is a break of structure. Now, I haven't broke the structure. We have the market, all right? Because this is a low and this is a high. Now, we have not broken this, so it's a little bit complicated. Remember, we said this is a fair value gap. Even on 4 hours, we still have a massive fair value gap there. So this is not a close. So we're still very, very complicated for the market to sell. Okay, you see that? Now, so you go to 1 hour time frame. I need to be very, so this is what's called top-down analysis. You can see all of those points I marked that will enter the market from. So now the market was coming back here on 1 hour, on daily time frame. This is the internal structure, 1 hour. So here you have a high, a low, and a high. Then the market came and created a low here and moved back. So this is swing failure. Now it broke that and created a fair value gap. All right. Now, so listen, this is what we call breakaway gap. So this is a high momentum, pam, pam, pam. So this is a breakaway gap, and that we don't have a feeling to it immediately. So we come to have a break of structure here, all right? So then this rally back to it as another block, right? So this is a low. Now the entire point here, this is the break of structure. Okay, look at it here. And this structure got broken. And you have a low here. Another break of structure internal here, right? So this is a low. So this low now, this is a high. So we have internal break here. This is 1, 2, 3. I think this fourth. So you have a low here, a high. This is the internal structure. So as at the time your market come to your area of focus and tap into your point of interest inside your area of focus, you have this your 1 hour time frame. And then this is a low, and then this is a what? A high. All right. And then this is market structure shift. Then you expect the market to travel back. Then you have this other block here, and then it got mitigated. There is no fair value gap, but this other block got mitigated on 1 hour time frame. And now that probably going to form your entry point. Then the market rally up. That's 1 hour. Then you go to 30 minutes. It's going to be the same thing. You will say a repetition of the same thing, right? In 1 hour. So 30 minutes just will define it to an extent. So you see the same thing. You see here, market structure shift. Then you have this into the other block. You have power of free that form your entry. And now, but it's even inside your area of interest, rejection. And then you probably may not wait for this, or you wait for it to close, and then you find another entry. This is another entry continuously. Now, 15 minutes should be the last batch where you wait. So sometimes you want to find a trade and all of that. So you see that the markets rally. So I may not have time to do more detail here. So here you have this low. This is a structure. Then you have a low here. You have a high here. Okay, this is a low, and this is a high. Then you have a new low. So this is here. Then that means this is market structure shift. Then you came down again to this other block, or a total flow, right? A total order flow here, and then the market return back to you. So you can see that the 30 minutes actually make more sense for you to have taken your trade. So sometimes if you come to a lower time frame, very low time frame, and it's confusing you, you have to stay within the medium time frame. So especially in crypto, 30 minutes make more sense sometimes. Now, because look at it now. This is a breakout structure. If you don't train your eye, you may not see this thing properly. So look at it. This is a break of structure inside your, that's why you allow the candle to come into it properly. First, you go to the lower time frame. So here you have this a break of structure. So this is a high. Then we have another high. So then this is a new high. So this new high here, so you have this low, and then you have this high, then you have this low. So that means to an extent, if you take your Fibonacci retracement to this point, to this, like this, so some actually enter before this break. So as it come to the extreme, they take an entry. So read that. So right now, you have this, right? This is your low, and then this is a break of structure. This is an inducement, okay? This is what? An inducement. After the break, we have an inducement. That makes it a very nice one. Always pay attention. An inducement, then the market move up. And so that means, the what it, you have this from this swing low to this swing high. Okay? And then it came back to the extreme. So returning back to this area of focus. So look at it. Can see how trading is highly mechanical, not this jumping around most time people create. It's not what trading is all about. So you come back to this, on this your 5 minute, because you want to have a sniper entry. So now you have this, and on the extreme there, you have a fair value gap here, and then you have another flow entirely here. So don't get confused. So one of the lovely thing here is this. So this is a support. Now the market never closed below the other block here. Look at it. So now what do you have? So let's take off this. So the market come back to this point. Now this is accumulation money. This is a perfect entry on 5 minute time frame. Now, so that means at the close of this engulfing candle is your entry, right? That's number one. A pullback is not an issue. So ordinarily for a buffer, when you take a trade here, so it's supposed to be this way. So stop loss. So ordinarily, so what should have happened? You want to go to the other block entirely? No, you look at this is a swing low before this. If you like, you can capture all of these. So your stop loss is going to be this. So this is how to capture a very high risk reward ratio. So first of all, your first take profit is supposed to be here. So, but 1:2 risk rewards, that our first target. So 1:2 risk rewards our first target. Then before you start extending other things, I've just taught you the naked chart trading, and so you shouldn't have issues. Now, do you see something? Okay, so let me show you something you may not pay attention on. Now let's go back to 15 minutes. Right? What do we call here? So that's the little challenge we're going to have here. We say this is a fair value gap. Was it on daily? On 4 hours on daily. Can you see that? Can you see that? So now you can see. Now, so you can see you don't target this fair value gap. Now, if you look at it, that's how many ratio? This is 1:5.75 risk reward. Oh, yeah. So now you have taken your trade, you have taken your profit yesterday, or a beautiful trade. Now, but this is made possible when you know how to go into the market and do your proper analysis. Now, for Bitcoin, that means the timing for Bitcoin, I think, should be 1 a.m. local time, GMT plus 1, right? Let's look at it. So I think it should be, yeah? So let's go to, let me use 1 hour time frame. Oh, okay. So yeah, Sunday. So okay, yeah, good. So this is 12 a.m. So at 1 a.m. will have been the best time to come in and check all of this when the market has traveled. Okay, so the market closes inside. So at 1 a.m. is better for me. Okay. So at 1 a.m., 2 a.m. So because look at this trade. When do we get it? So we got this trade. Ooh, at 8 a.m. the following day. So can you see that? At 8 a.m. the following day. All right. So now let's do something very quickly. So I've just done proper market analysis for you. Naked chart. So every of your market, you need to identify all of this process so that you'll be in charge of your market. It's very, very important. You get that? If you don't pay attention to this, you're going to fail a lot of things. And you think that the trading is not favoring you. No, you are the one not favoring trading. So if it's gold, it's the same thing. So now let's go. And then this is now the upper hand you have, the advantage. Your advantage is here, your leverage advantage. What do we say trading is? We say, look at it from the beginning, we say trading is an asset. And the trading asset is equal to mindset plus skill set plus tool set. So if you didn't write that thing down, go and write it down, go and screenshot it like I did. So now let's take our tool set. Your mindset is done. So let's take our tool set, and your skill set is done. So let's enable this scanner, massive scanner. So this is our scanner. You can see now, what did our scanner do? Our scanner scale our dealing range. Look at a support and look at a resistance from wall to wall. Now, next is this. By structure, you're going to learn something. By structure, look at it. This is a low. A low will be here. L, L. Yes, they are there. So what am I supposed to do next? So when I tell you that the day was bullish, so the new day is supposed to be bullish. So if that's the case, the next thing I need to go is to follow the structure. And where is the structure lying down? It's lying down at 4 hours and 1 hour. So let's click on 4 hours. Fantastic. So as at yesterday, when you came and this market we bought in, this 4 hours says buy. So when it says buy, what to do? Listen, this is how we use our scanner. First, you open the daily chart to see the momentum of the candle. Yesterday candle closes on the previous day to that yesterday. All right. Is this signifying momentum, continuation, or a reversal, a kind of whatever? Right. That means today we should be optimistic for a buy or optimistic for a sell. You come to your 4 hour time frame and you come to see that the market shows you a buy, and that's a buy here. So this candle. So what to do is to delineate the candle that says you should buy and now go to 15 minutes. Please take note. Since it's 4 hours that give you the buy, then you straight down to 15 minutes. So in going down to 15 minutes, the scanner still proved that it's valid. It's not cajoling you. How? Look at it here. Accumulation, manipulation, and distribution. This candle closes. Those of you who have our scanner, we have the rules. And then this is it. You buy and put your stop loss below here. So you can see the candle, the scanner even give you an early entry before, of course, market structures shift and all the like. So that means your entry will have been here if you use our scanner. Your entry will have been here. And then stop loss below here. All right? And then 1:2 risk reward first, and then the next. Now, if you're not comfortable, right? If you're not comfortable, you can. So when you come for this type of market and you can find this, all you need to do, maybe you come late, is just to wait for a pullback like this. With the market's already here and it say hi. That's why the structure of this thing, the stock, our scanner is crazy. Now, when you come and it says hi, so you miss this, right? It says hi, no problem. Wait for the pullback, didn't close below it, and then you look for another entry point. This is my another entry point, right? You missed this, no problem. The market again pull back massively. Now we have this accumulation, manipulation, and distribution. Look at the powerful engulfing candle. You are entering again here. Now, if you can, now this has not crossed, this another one. So this another entry. This is how powerful a scanner can be. Now, so if you go to 5 minutes, probably to look for sniper entry. So let's look at it. So look at it. Is that the same thing? Look, accumulation, manipulation, distribution. So your entry will be here, right? Then the markets had created a high here, a pullback to it. Look at another entry. Massive, right? That's our scanner for you, ladies and gentlemen. So then the market was doing what it was doing, right? Here you can high, all right? So the market created this. So probably now, maybe at the time you are now coming, even if it's 8 a.m., just make sure, follow this scanner, it will mislead you. Then the market, you have just ascertained that the day was bullish. That's good. Then look at it, another buy opportunity in here. Then market continue. So that is the rules and the strategic way of trading with our scanner. I hope you get it now. So this is the 3-in-1 system: mindset, skill set, and tool set. Mindset, skill set, and tool set. I don't know why in Plan B Express PBX Club, we have too many things about 3-in-1. Maybe because of Trinity. Okay. We have too many things around 3-in-1. 3-in-1 solution. Passive, active, and all right, residual. Passive, active, and residual. Passive, active, and residual. Okay. So now, new day you have come. Let's go to the new day like today you have come. And I've told you that today is bullish, so we should be buying, but we are mindful of this gentleman here. So I'll give you a scope. So here we come on a daily. So that means today is here. So I go to 4 hours. You know, this is the continuation of yesterday. So when you go to 4 hours, you can see your support zone is active, but you have not seen buy because this buy still continue. You go to 1 hour. All right. In going to 1 hour, you see sell. This sell is just a pullback. So you are not selling. Now, so I see a buy on 1 hour already, but not all of you will see it. If you are my student, you will see it. If you are OJ, you will see it. So on 1 hour, it's already giving us a buy, but you wouldn't see it if you are not OJ. So go to 30 minutes if you are looking for our scanner. So I've not seen any buy. So let's go to 15 minutes. Do you know where you're going to see it? Go to 5 minutes. Period. Very simple. Hello? Good. Now, because you know that we're bullish, now you come here. At what time is this? This is 2:40 a.m. in the midnight. So that means you're coming to, now this was not a valid one, right? This was not a valid one. Now, it was when it got here, it makes it valid. So maybe if you are the type that insist, because this is not an A plus, so but it's a good, but it's not an A plus. So let's say it's valid, but it's not an A plus. So your stop loss will have a buffer. If your stop loss does not have a buffer, if you put it here, you are probably likely to be stopped out here or no. Now, so you come back to this point, and what do you see? The market was creating this. You don't sell. Forget any sell once you are able to delineate that the market is bullish for the day. Don't get deceived. Okay? The only challenge we have is this fair value gap on top here. So here you have this. The candle say buy, but these are not powerful. Now, until I have an engulfing and close it, and that makes sense. So that means you're buying here. And then your stop loss, of course, below. 1:2 risk reward. So 1:2 risk reward is already done here. So 311 points, it depends on what you are trading with. Then 622 points. So if you're extending here now, by now, if you're going to go to this fair value gap, that means 1:4 risk reward. Very simple. So, ladies and gentlemen, I'm just showing you how practically we use our scanner. And I've told you how to open your mind to see the naked chart and study the naked chart. Does that really make sense to you? Does. Okay, that's the lovely thing about this market. Oh, amazing. I have about 3 positions running on that. Okay, so please, ladies and gentlemen, I think this is very simple. All right, this is very simple. Please pay attention, it's very important. Maximize the trade and go through this video again and again. But above all, you must have timing for your trading. Let's see when this trade occur. This is at our 6 a.m. Nigeria local time. I find that trade occur more from 1 a.m., let's say 2 a.m. to 4 a.m. Let's say 1 a.m. to 4 a.m. or 1 a.m. to 3 a.m. Or let's make it 2 a.m. So, okay, no, I won't tell you this. Okay, I won't tell everybody this. If you are my student, you know what it is. So apply the proper information. Thank you very much. My name is Flix. I'm the team lead of Plan B Express. You have more detailed inquiry and information you need, then you can chat with this phone number +234 90 and 998. Take the number again +234 90 998. So you want to subscribe for the scanner. For now, it's still $200 per year. And then by the time you subscribe, you have access to the club and it's free for you. Then for additional training and information. Thank you very much. You have a nice time. Bye-bye.